Welcome to today's corporate webinar with Smartkarma. I'm your host, Maliha Hadi. We have an exciting discussion planned for you today, so let's jump right in with an introduction to our panel. We are joined by Mr. Nikhil Eapen, Chief Executive Officer at StarHub. For those unfamiliar, StarHub is one of Singapore's leading homegrown telcos delivering communications, entertainment, and digital services across consumer and enterprise. As CEO, Nikhil directs the company's strategic focus and transformation efforts. Joining us also is Smartkarma Insight Provider Alec Tseung. Alec is currently a partner at KT Capital Group, a frontier markets-focused investment advisory firm. He brings over 15 years of experience in capital markets to our discussion. We'll start the webinar with Nikhil walking us through a company presentation, after which he will engage in a fireside chat with Alec. We're taking live Q&A for this webinar, so I would request our attendees to post their questions in the Q&A tab at the bottom of their screens. During the webinar, we'll also share some links on how you can connect with StarHub and read more research by Alec, so please do keep a lookout for messages in the chat box. So Nikhil, Alec, it's great to have you with us today. Let's dive right in with an introduction to StarHub. Nikhil, the floor is yours.
Thank you, Maliha, and thank you, Alec, for joining me today. It's my pleasure to be here, and thank you for hosting this seminar. Thank you also for joining to hear a little bit about StarHub. As I said, I'll start with a few words, and then we can move on to some Q&A and some more interesting discussion, perhaps. So many of you are aware of StarHub. We've been around for about 25 years. In fact, this is our 25th anniversary, something that we're rather proud of. But just by way of bringing you up to speed on StarHub, StarHub is a business that is really at the center of Singapore in all that we do in Singapore. Our business is equally divided between consumer and enterprise. We have roughly about 1.1-ish odd billion of revenue each in consumer and enterprise. Now, within consumer, we have been historically known for our hubbing strategy, and we operate across mobile, broadband, and entertainment, as well as in some other product categories. Taking each of those one by one, in mobile, we are the number 2 player in mobile with roughly a revenue market share of about 24 to 25%, which is actually about 600 odd basis points ahead of the number 3 player, which is itself larger than the number 4 player. And as many of you guys know, those two are consolidating. The number 4 Simba is acquiring the number 3 M1. But we're about 600 basis points ahead of M1 in terms of revenue market share. So we're a strong number 2 in mobile. Now in broadband, we are actually the number 1 player in the market. We have a revenue market share of about 43%. So we lead. And between us and Singtel, we roughly have about 85% of the market. So the dynamics in the broadband market are a little bit different from mobile. And in entertainment, which is your TV plus OTT offerings, we're actually the leading player. We have roughly about a 2/3 revenue market share. Now, I've kept saying revenue market share because revenue is what we're focused on. We're focused on monetization, and we're focused on growing our revenue market share in what is obviously a very competitive landscape. Now, the other side of our enterprise business, or rather our business, is our enterprise business, which is the other 1 or so billion of revenue. And our enterprise business is a growth business. We grow overall year on year. It's made up of a couple of different things. It's made up of a cybersecurity business, first of all, which is our joint venture with Temasek, Ensign. But perhaps larger and more important, it is made up of our regional enterprise business, which is some enterprise connectivity, some regional businesses in Malaysia. But the most exciting part of that, and the part that's growing really fast, is our managed services business, which actually grows at about 13% year on year. So our goal with the enterprise business and what we've been doing is winning large contracts with blue chip customers in the government and enterprise space in a way that's not just pure telco and pure connectivity based. Neither is it a systems integrator approach, which cobbles together tools and tech that are resold from others, but really a platform-based approach, what we call modern digital infrastructure, which has ubiquitous connectivity, hybrid multi-cloud, tech and tools embedded, and a lot of data analytics and AI embedded, all of which we use ourselves as our primary customer, and then we also make available to our enterprise customers. So as I'd mentioned, that business is growing. Now, when you look at us, financially, we have, as I mentioned, about 2.4 billion in revenue, equally divided, roughly speaking, between consumer and enterprise. We have a market cap, over $2 billion. We have paid an attractive dividend yield. We actually have very strong cash flow, which has allowed us to continually delever over time. So we ended the year last year at about 1.29 times net debt to EBITDA. So that's StarHub in summary. So when, we just released our first half results, and what we did at our first half results was articulate our today's strategy. And we articulated it, of course, in the face of a lot of dynamic sector flux. Consolidation had just been announced with the acquisition, by Simba of M1. Clearly we have very competitive consumer markets. We clearly have a significant growth opportunity in enterprise. And as we've also seen, in cybersecurity, it's a real imperative, not just for us and not just for the telco sector, but for Singapore. And number 4, everyone is automating, using AI and reducing cost. So in the face of that dynamic sector flux, what we want to do is drive long-term value, as we talk about here, as a human-centric technology company. So there are 4 pillars to that. Number 1, consolidation has happened, or is happening rather. The deal is yet to close. But we have been taking revenue market share over time, as I mentioned, across all segments, and we intend to continue to be aggressive, not just on price, but on value broadly defined with, quality as our centerpiece. So we intend to continue being aggressive in the consumer marketplace. And we intend, to really position the market for stabilization and recovery, particularly given there are a number of smaller players out there who may fall by the wayside. Number 2, on enterprise, as I said, we have good traction in the enterprise segment. Managed services, which is a significant business, grew about 13% year on year. In fact, when you look at our order book, it's growing at roughly double that rate. So we want to double down on enterprise, double down on managed services, and double down on our modern digital infrastructure offerings. And we want to do it not just in Singapore, but as we have been, drive this aggressively into Malaysia as well. So that's what we want to do, and we intend to pursue, obviously organic growth in the enterprise segment, but we are also evaluating M&A to rebate our business more towards enterprise and to increase our growth in enterprise. Number 3, as I mentioned, cybersecurity is a national agenda. It's not just a StarHub or a Telco agenda. And we are uniquely positioned here. We have been enhancing what is a pretty robust cybersecurity posture, to differentiate ourselves and to protect ourselves, but also differentiate against the smaller telcos. But we also want to keep our clients safe, our government and enterprise customers safe. So as we provide them our modern digital infrastructure offerings, those will, by definition, be cyber secure. And then last, like a lot of other people, we're focused on the cost reduction opportunity. We have finished up the build phase of our transformation, which really took about, close to $300 million over 2 years. And this year we're moving into the harvest phase. So we're going to be legacy decommissioning, so decommissioning a lot of legacy platforms. We're actually adding 3 new streams on top of that. Number 1, we're driving, a lot of what we call closed loop automation in our network to make it, worthy of less human intervention, more self-healing, self-detection, that kind of thing. We're re-architecting, our IT side of our business to move more from like a waterfall traditional structure to a DevOps structure, which is more end-to-end domain, where we have the opportunity to release a lot of cost. And then we're simplifying our business, particularly in consumer, and the way that we focus on the consumer to take a lot of bottlenecks out. And that we intend to do, starting now, over many, many quarters, really over the next 24 months, to deliver consistent, savings over time. Now, these 4 pillars are supported by obviously what we have, which is a strong capital structure and a strong balance sheet. Take note of the 1.29 times net debt to EBITDA that I pointed to, which is where we ended last year. We continue to remain very committed to our dividend policy and driving total shareholder return. We have strong free cash flow. That's what has allowed us to delever, and that's really healthy cash generation. And we have an organic strategy which will supplement with M&A as well. And we have completed, our transformation. So we don't really talk about transformation anymore. We talk about continuous evolution. And we are, as a business, both on IT as well as network, on hybrid multi-cloud, which enables a completely different way of working, and ongoing delivery of business value as well as cost reduction. So that's where I'll stop, Maliha, and we can move on.
Brilliant. Thank you, Nikhil. I think that was some very important context that we were initially missing. So let's dive further in by transitioning to the next part of our webinar, the fireside chat. Alec has some really interesting questions lined up for you,
Great.
Nikhil. So, Alec, I'll hand it over to you.
Sure. Thanks, Malia. And hi, Nikhil. Thanks a lot for the presentation.
My pleasure.
Very exciting to hear about the latest development of StarHub. Right? To me, StarHub has always been such a household name in Singapore, especially on the retail or consumer side. But it feels to me that just the company's strategic focus going forward is actually more on the enterprise side. So let's talk about that first, right? So as you mentioned just now, right, the strategy for the enterprise business, which includes both cybersecurity and managed services, is about regional expansion. Right? The company has also reported growth from the consolidated operations of Singapore and Malaysia. So
Yeah.
So what's the end goal, or I would say the long-term ambition of such regional expansion, and how will StarHub navigate the different market dynamics and competitive landscape across such a diverse region, such as Southeast Asia, as you scale beyond the Singaporean home market, right?
Sure. Great question, Alec. So just a few things. Number one is context. We remain focused on both our consumer and our enterprise business. But clearly, the enterprise business is where the growth is. The consumer business has attractive propensities once it is stabilized. And we'll talk more about that, of course, with consolidation and releases a lot of cash flow. But enterprise is where the growth is. Now, I will say that the enterprise business, when you think about the trends, around, companies, let's call it anyone with a developer community, and that could be a real estate developer, it could be a factory environment, it could be, an institute of higher learning, is looking to move to more of a smart city, smart nation construct with smart city, smart nation type use cases. So really call it kind of an intelligent community, right, of people and assets. That's point number one. Point number two is, there are a lot of companies that are late in their tech refresh. And they're on-prem system, they're using legacy software. And they're really, really concerned about resilience. They're really, really concerned about cybersecurity. But guess what? They need to do this all at once, but they have the opportunity to leapfrog, not doing it in a traditional way, but perhaps availing, of people like us who can help them accelerate. So that's number two. And then number three, everyone's looking to see how they can harness, the data that they have and put AI on top, kind of Gen AI, that overused word. And realize value and deliver more value to their user communities, right? So if you're a retail mall, you want to deliver more value to your the people, your tenants, right? Who in turn want to deliver more value to their customers. So it's kind of a food chain effect where everyone's trying to deliver value down the food chain. So that's what we want to do. And there's tremendous value when you look at what we're delivering. We're delivering a platform. We're not an SI. We're not a pure telco. Sort of embedded all together. And that platform brings together what we call ubiquitous connectivity. So it's not just about 5G or fiber broadband, optical networking, because you, Alec, you don't care. You just want to do what you do, right? You don't care how it's delivered to you. And you want to do things on hybrid multi-cloud because you want to use cloud native tools. You want to have choices, right? And you want to be able to monitor and manage all of that for cost, for quality, and you want to do it in a secure way where you're protected against what are very significant geopolitical threats. So that's what we deliver to you. We have that platform, and we can deliver to you as a whole, we can deliver to you as layers, we can deliver to you as modules, but we can do it fast, which gets you the value fast, and we can deliver it to you at lower cost. So we've seen great adoption of that. Now, one of the statements you made was this sort of bifurcation between regional and Singapore. I must clarify that we see the spend environment in Singapore over the next couple of years from government and enterprises as very strong indeed. Very strong indeed. And that's because of the three things I had mentioned: smart city, smart nation use cases, tech refresh long overdue, but you want to leapfrog and make sure you're doing it in a fast and safe way. And number three, harnessing the data that you have. But we don't think that opportunity is available to anyone. It's not available to small scale players. It's not available to people who just do things in a monolithic, connectivity way. It's not necessarily it's served by the systems integrators, but we don't think customers really get a great deal. It's too slow. It's not really delivering value fast. So we think we're well positioned. So we want to do that to harvest the significant Singapore opportunity, but we want to do the same thing that we do in Singapore in our regional markets. And right now we have a significant presence in Malaysia. So we're starting to do the same kinds of business on top of the technology solutions that we already provide in Malaysia. And we want to do that in another market and another market. So we signed an MOU with the Philippines' largest systems integrator and technology solutions provider, a company called Trends. So we're going to do that more in the Philippines. So that you see how we're going to cascade. We're focused on Singapore, fantastic market for all the reasons, fast adoption, all the reasons that I talked about, and then scale into Malaysia and then scale into other markets. So we want to keep moving up that growth curve.
Got it. Yeah. In this case, then I guess so. Like you said, right? So scale is one of the important factors here. But besides that, what exactly is let's say StarHub's value proposition, right, for the enterprise, corporate, and government clients, given that like both large scale, global, and other regional players are very active in the region as well? Then how does StarHub sustain such a differentiated value proposition?
It's a very different proposition, right?
Yeah.
So if you're a customer and you want to build a use case around, let's just call it a private network, which allows you to run, factory automation or drones, with edge analytics, you can go to a systems integrator, but it's going to take you years to put together because they're going to take all those pieces. And by the way, almost all of those pieces, they're going to cobble together by reselling you pieces that they bought from somewhere else. They're going to take a lot of time to put together some kind of, way in which you can control it through a dashboard or otherwise. And it's going to cost a lot of money because they're going to buy all these things and they're going to add margin on top. So you have that option, or you can work with us where it's all pre-built and pre-integrated with us as the first user. And that's very important because we run huge volumes of workload and data. You telcos run larger workloads than anyone else. We have the highest standards of resiliency. We run with the highest standards of cybersecurity, resiliency and cybersecurity because of a CII. So when we make this platform available to our government and enterprise customers, it's all pre-integrated as a platform. So we don't have to put it together, for them, putting together bits and pieces that we go and acquire from elsewhere, because it's all the tech and tools that we've already integrated into our platform for ourselves. Number two, you're getting a proven platform because it operates at the levels of resiliency that, with the huge workloads that we, function and operate with, and to the cybersecurity standards that we function and operate with as a critical infrastructure provider in Singapore, where we operate with very high standards. So that's the benefit to a government or an enterprise customer.
So based on what you just described, right? So I guess that's
but I must confirm, Alec, we don't do everything, right? What we do are infrastructure-based use cases. But the definition of that is expanding, right? Because, cybersecurity has to be at the infrastructure level upwards. Data has to reside at the infrastructure layer and be protected at the infrastructure layer upwards. So anything that is infrastructure-based with layers of value on top that benefit and leverage this infrastructure is what we do. What we're not really focused on doing is, body shopping or building apps for others. That's not our business. But we would argue our business, the sort of business we do and we want to do, is attractive business because it's pretty high margin.
Yeah.
It's not margin, sort of systems integrator. Yeah.
So I was going to say, so based on what you just described, so that, I guess, is the modern digital infrastructure platform play.
Yeah.
You just mentioned in the presentation, also that has been highlighted in the financial report.
Yes.
And then how does that, I would say, how do you differentiate against those, because just now you also mentioned about the hybrid cloud, the trend of hybrid cloud or multi-cloud environment, right? So how do you also differentiate that or help the clients manage the complexity of this multi-cloud environment?
Yeah, so what we do is a couple of things. So, the hyperscalers are great partners of ours. And in fact, they are embedded in our platform. So, say a customer of ours wants to build a use case on hybrid multi-cloud. Why should they do it themselves or do it through us? The benefit of doing this through us is as follows. So number one, they get those hybrid multi-cloud options pre-integrated with ultra low latency. And that's a really important thing for some use cases, right? It's a really important thing when you're managing physical assets like drones and, factory automation and all of that. It's really important in a financial services environment, for instance, like algorithmic trading, right? So there are a whole slew of use cases where ultra low latency is really important. So there are many customers and in many markets and in all markets who don't necessarily have ultra low latency to every public cloud option. So that's point number one. Point number two is we also give them a private cloud option in tandem with their public cloud options. And a private cloud option can be more data secure, satisfy sovereignty requirements, and can be more cost effective. Because once you start running a lot of heavy duty compute on public cloud, your costs can spiral upwards. So that's kind of point one or one and two. Point number two or three, what we make available for our clients is a level of equivalence across all private and public cloud options. So we give them the same consistent experience around monitoring, management, and cybersecurity posture. Otherwise, they would have to recreate all of that with tools that are native to each of the public cloud options, right? And then number three, as I said, we give them all the tech and tools to be able to do those things. Yeah. So, pros and cons, but that's why you do it through us. And it's also going to be more cost effective, right?
Yes.
Because we are the anchor user. So we are users of the hyperscalers at a lower price point. And when we make those public cloud options available to them, by the way, with all the tech and tools for monitoring, management, cybersecurity, it's going to be way more cost effective than they do it themselves because they're benefiting from, terabits of workload that we, as an anchor user run through our systems.
And just now you also mentioned about this business being high margin, right? So if you're comfortable disclosing that, like what is the margin? What are margins like for this kind of business?
Sorry, go ahead. What was the second part of your question?
Yeah, and what are the ambitions here, like in this business for you, for StarHub?
Yeah, so we, when you look at pure play, like lease line, right? Fiber connectivity, which, us and Singtel sell, that's not a growth business, but it's a very, very high margin business, right? So pure play, kind of fiber connectivity, which I said us and Singtel do, that smaller players don't really do that, roughly about 70-80% gross margin. And then systems integrators, and you know who they are, run at about, I think like someone like an Accenture will run at a 15% margin. Like global best in class is 15%. Some of the smaller scale, but still large scale players run at about 10%. 10, 11%, right? Some of the regional guys, and then some of the really smaller ones, which, if you look at the number 3 telco, they bought some of those, like the more sort of hardware guys, they're really 5%, I think. So when modern digital infrastructure is kind of bang in the middle of that range, let's call it between the 15% and the 70 to 80%. Because if you think about it, it's bringing together both, right? It's embedding infrastructure with tech and tools. But we're not layering margins. Yeah.
Okay, let's move to the cybersecurity, right? Since that's also a core pillar.
I love to talk about cybersecurity.
That was highlighted just now, right? So yeah, can you just elaborate a bit on that, or expand on that as well? And here, are we talking about investing for StarHub's cyber resilience, or is it more on the Ensign JV that we can expect more solutions and offerings in the future?
On the other side, you have huge state-sponsored actors. So it's asymmetry of threat because they are bigger and stronger than us. It's asymmetry of time because they can choose when to attack while we have to run a business. and it's asymmetry of terrain because they can find anywhere to attack where we have to protect everything. So this asymmetry is a real problem. It terrifies me, but it's something that I'm passionate about. So with that as a precursor, what do we do? So we actually approach it in a number of different ways. So our cybersecurity is really core to us, but it's core to us in a number of different ways. So number one, as you correctly point out, Ensign, our joint venture with Temasek, is a cybersecurity services provider. So Ensign provides pure play cybersecurity services. They will build you a SOC. They will, act as a managed cybersecurity services provider of their SOC. They will perform a whole range of cyber services that are really important, and they do it largely for government, which speaks to the very high level that they operate at. So they are government grade, and they make that available for enterprise customers too. So that's point number one. Point number two is, if not more important, is that we provide our customers secure infrastructure. Whether it's secure connectivity, secure, hybrid multi-cloud, secure private networking, because our security platform and tools are at the core of our platform. And that's a really, really important thing because we have and continue to make investments that are not really economically viable for anything but the largest companies to do. And number two, all but the largest companies don't necessarily have the same degree of infrastructure, cybersecurity capability that we have. Because as I mentioned, I keep coming back to data volumes. We run hundreds of terabits of data every single day. And you have to filter that and analyze it, and identify anomalies for threat detection. And then you have to remediate that. And you can't do that. If you wanted to do that, with old school servers and people, you'd need to cover the whole of Singapore with servers. You wouldn't be done. And if you wanted to do it with people, you'd need your population about 5 times the size of Singapore. So we do it with, the tech and tools that we have, which are increasingly going to be more agentic AI in nature. So that's what we do. Number two, we provide cybersecure infrastructure to government and for ourselves as a key, kind of at the apex of kind of the infrastructure ecosystem in Singapore. And we make that available to government and enterprises. And then number three, we also make that available, our consumers by definition, are a beneficiary of that. And we are supplementing that with security offerings for consumers. So we have, Scam Protect offerings, we have Cyber Protect offerings, we have cyber insurance. So we have the full suite. And by the way, that level of security as a consumer, you may not think you should care about cybersecurity, but you really should, because each of us are the weakest, Achilles heel of any potential cyber attack. So we have to protect ourselves, we have to protect our families, and we have to protect the company we work for. And we all have the duty to protect, our Singapore, right? And you're not going to get that if you work with, you're not going to get that with everyone. You're really not, because not everyone, certainly in the telco sector, has made those kinds of investments, certainly not the smaller scale players. So I think that's our approach. And, I think everyone has to feel a suitable degree of, paranoia. First, in terms of balancing our duty, we were very clear with investors that we have and we're going to have to spend some money on cybersecurity. And that may have some financial consequences. So that's why, when I went through my 4 pillars, things like, we're going to have to continue to be aggressive in consumer because we're going to position the market. We're going to help position the market for stabilization and recovery, right? Cybersecurity is the other example where we're going to have to continue to enhance our cybersecurity posture. So some of these things, have short-term consequences, but we believe that the right long-term thing, medium to long-term thing to do, because increasingly people will differentiate between who they want to be a customer of, whose ecosystem they want to be part of, and who they don't. And certainly in the government and enterprise customer landscape, it does reap dividends.
Okay, and one last question on cybersecurity, right? And specifically on Ensign, which is the JV with Temasek, right?
Yeah,
So
sure.
what's the long-term plan for this, right? Would there be an IPO for this in the future in order to better unlock and realize the value there?
That I can't really comment on. We just want Ensign, and Ensign's really a neutral company. We run it, Temasek and us run it through a board. But that's kind of indicative of the fact that we want Ensign to be very clearly positioned as an independent cybersecurity services provider. We want Ensign to grow and prosper. We want Ensign to grow, its arsenal of IP. We want Ensign to have, the best people in the space in Singapore and Southeast Asia. So we're really focused on those kinds of business objectives. I think the rest will take care of itself.
And finally, like moving to the consumer side, consumer market, which is also, I think most of the people have become aware and familiar with StarHub's brand. So, and the mobile market in Singapore, as we all know, is highly competitive with price wars, consolidations that have been going on for the past few years.
Yeah.
And just given the recent acquisition of M1 by Simba, how do you see this is going to further impact StarHub or the overall sector here in Singapore?
Yeah, so I think consolidation is a good thing. So frankly, we're quite pleased and relieved to see this acquisition happen. And it's interesting. It's really a leveraged buyout, right?
Yeah.
Because you have the number 4 operator with I think about 67 million of EBITDA. By someone with about 100, I think they said 195, but they expect it to fall, so maybe 170 million of EBITDA. So someone's buying someone 3 times their size, with leverage out of the box, which they estimated about 4 times, which will probably be a little bit higher. So, I think the acquisition of, I think the consolidation as an acquisition of this form is a pretty good thing, because it should lead to more discipline. I think the market now in consumer is not healthy at all. It is really not healthy for us to be a market where our pricing is the same or lower than Malaysia, Thailand, Cambodia. It's ridiculous. Same as China, same or cheaper than China, when we have a per capita income that's 7 times as high, which goes to cost structure. It's not healthy. And it's not healthy because it's not a good environment for fostering innovation. It's not a good environment for fostering quality and resiliency, and it's not a good environment for fostering the investments in cybersecurity that we need. So consolidation is a good thing. I think, we want to make sure the consolidation is forced by stabilization and recovery. We don't really know when that will happen. It's not, it's not for us to determine. So we're going to continue to be aggressive in the immediate term and, continue to take market share as we have been. It's nice that the market has now gone back to this, in revenue market share. I mean, Simba M1 obviously has a lot of subs, but they're kind of low value. But so it's nice that the market has gone back in revenue market share terms to roughly about 50, 25, 25. So theoretically, it should be a nice structure, for the market to stabilize, but we'll be quite forceful in the interim. And I think what we also want to see is that the party that comes out of this consolidation, really has to also do the right thing in terms of cybersecurity and resiliency, rather than just, bottom fishing on price. Look, I think consumers will get a great deal no matter what, right? But they don't need to, I mean, paying so little, I think when consumers think they're getting a great deal, they're really not, because they're really sacrificing in other areas which they may not be fully aware of.
In this case, in this case, then beyond pricing, for example, right? So what strategic lever will StarHub rely on to defend and to grow the market share aggressively? Right?
Yeah, we'll do what we have been talking about, but perhaps even more so. So we always talk about multi-brand, multi-segment strategy, right?
Yep.
Which is, in mobile, but also in broadband, you roughly have you have 3. We call it 3 segments. You have a premium segment. So in mobile and broadband, you have a premium segment, which is Singtel and us. M1 vacated premium a long time ago. It chose to just go low price, right? Then you have a digital segment, which is like Circles Life, which sits on M1, and then you have MyRepublic, which sits on us and M1 for 5G and 4G, and then you have our Giga, you have Singtel's Gomo. And so that's a very crowded space, I think, which is being a bit squeezed. And then you have the value segment, which is a segment that has really grown. And there you have Simba, which is the out and out market leader. You have M1 and M1 Max kind of sitting there as well, lost a lot of market share. And then you have 8, which is actually the player that's, in the last 12 months has grown the fastest, which is us. And you have Heya, which is Singtel. So my point is, you're going to see us continue to be active in all 3 segments. But we're going to focus on quality as well. And we're going to continue to focus on quality because at the end of the day, we think there's always going to be a good customer segment that wants quality, that wants service, that wants attractive device plans, that wants attractive bundled offers. So we're definitely going to continue to focus on that and even amplify that. But we'll be there aggressively in the value segment as well. Yeah.
Okay.
And in digital. Now, broadband is kind of the same, kind of different because we don't really play in the value segment. There's only one real player and call it the digital segment, which is MyRepublic, which is us. Which has a really faithful following of very demanding customers. They say, oh, we like to serve gamers and geeks, right? And they're willing to pay. And then you have the premium segment with bundles, which is us. So, we're number one. So, but we don't play in value for now.
Got it. Okay. And moving on to shareholder returns, which so some of our audience today also are asking this question as well. So I think over the past few years, the company has been emphasizing a lot on its commitment to driving long-term shareholders' returns.
Yeah.
By both paying out dividends and also launching share buybacks, I think of 50 million Singaporean dollars. So
yeah.
How much of that has been executed to date, and does the company intend to renew or expand the buyback next year in 2026? And specifically from some questions from our audience is that like what company can do or will do to improve the share price performance of StarHub?
Yeah, I think a few things. So number one, we continue to be very committed to our dividend policy. And we had launched the share buyback. We had put it on hold for a bit, and we'll certainly look at it again. So that's for sure. We will definitely look at it again, we'll evaluate it very seriously. In terms of growing our profitability, what's been really, we had like a period where I think we grew profitability consistently for about 8 or 10 quarters. And we did that because we were kind of either growing or holding on to the consumer business while growing enterprise. But then the consumer market just got too lousy. It started eroding too fast. So for the last few quarters, it's been dragging down our profitability. So I think in order to get back to the zone of growth, profitability growth again, we need to help the consumer market stabilize and recover. Albeit, as I said, we're going to continue to be aggressive because we think that's the right way to get the consumer market to stabilize and recover. So perhaps some short-term pain for some long-term gain. Or let me rephrase that: short-term pain for some medium-term gain. So that's point number one. Point number two, we want to continue to grow our enterprise business because our enterprise business is growing. Now, in the past, it hasn't, in the last 2 or 3 quarters, that growth, the consumer decline has been such, even though we've been taking market share, such that the enterprise growth in profitability terms hasn't been able to outweigh the consumer decline. But we hope to continue to growing the enterprise business and get it to the point where it can offset consumer trends. And that can be organic, but it can also be inorganic. And then number 3, we're going to, we've been spending a lot of money actually on transformation. We didn't know the consumer slide would be so dramatic, but so maybe we would have done it a little bit differently if, we took the decision in 2021. But the money is now spent. The platforms are now built, and that gives us the opportunity to take a lot of cost out. So I would say those are the 3 things. Position for consumer market recovery, scale enterprise, organically or inorganically. And number 3, take cost out through automation. Roughly, if it's one to use, it's automation. That kind of runs through everything. And we can do it because we finished our transformation. Everything's on the cloud already.
And speaking of just taking cost out, right, or cost optimization, as you highlighted in your presentation. So what are the areas, like key areas of savings that investors or shareholders can expect, and how do you balance that with growth, right?
Actually, there's no conflict with growth across any of the four areas, because the era, the what I call prosaic cost savings, cut here, do a cut here, snip off something there, for good or for bad, that's done. Of course you can continue, but it's not going to be terribly material, but we'll do it anyway. But it really boils down to four areas, actually, all of which accelerate business speed and may actually help revenue, retention, and growth, but at the same time cut costs. So number one, our transformation is complete and our cloud platforms are built. But on the consumer side, we have to migrate our customers onto the new platforms. So that process is starting now. Once that process is completed, sometime over the next year, then we will be able to decommission our legacy systems. So that frees up, some amount of cost. So that's what I call pillar, kind of sub-pillar number one of cost reduction, which is legacy out. Number two is network automation. And network automation is, now that our network runs on hybrid multi-cloud, we have a lot of automation opportunities that come from looking at service assurance and service management in a way that's quite data-centric, where we can reduce human intervention and we reduce cost associated with the human intervention and the second order, third order cost from rectifying things which, are now going to be in the zone of self-rectification. Right? So that's area number two. Area number three is we're re-architecting our IT on the back of the fact that our IT now runs on cloud to a much more agile way of operating, where it's much more iterative and our reliance on external vendors is much, much less. So that's the future state that we're going to be moving to over the next year or two. And then number four, what you're going to do is see us, really simplifying the way we address the consumer, actually. And I can't really talk too much about that, but it will deliver better customer value. But it'll also allow us to simplify, kind of through the supply chain at our end. And again, based on, the cloud transformations that we've now completed. So those are the four areas. What we've said is, we had a legacy out saving stream, that was a certain amount, and now we're multiplying that amount by 3 or 4 because we're adding, 3 more streams. But we're not providing visibility to the market on we're going to do this by this date. What we're saying is we'll come back to you quarterly with a definitive and deliberative roadmap of execution.
And the last question from my side, before we open up to address the questions from the audience, so is on the M&A strategy, right? So I understand the company has plans to build a unique ecosystem through M&A and partnerships. So just trying to get a sense, like what criteria have been guiding the company in terms of search for acquisition partners or targets, and how will these acquisitions and partnership deals advance the company's beyond telco positioning?
Yeah, so the 2 areas that I've always talked about where we wanted to be active on M&A, one was domestic consolidation, and the other was enterprise. So addressing the first, now the domestic consolidation has happened. So we've saved ourselves a bit of money. But there may be some smaller consolidations available in the market, so we'll keep a lookout for those. And this is on domestic consumer. Now, on the enterprise side, when you look at, how we want to scale, we want to add scale and delivery capabilities, for our regional execution. We do want to have offshore access for more talent at a better cost point. We're not in body shopping, so we're not looking for, kind of low-priced resources. The business that we do is high-grade complex business. So we're looking for good people. And Singapore only has so many. So we're looking for an access to regional talent And then number three, we'd love to go into a new market, right? But ideally with someone who has a good blue chip book of revenue and customers. So that's what we're hoping to achieve, through a potential enterprise acquisition. Kind of hit those three birds with one stone. Execution scale, get execution scale, offshore talent, and go into a new market.
Right, okay. So that's all from my side. So we have a few questions from the audience today as well. And I think some of the questions we discussed, but let me just
Sure.
just pick the ones that we haven't touched on. So there's one about responding to share buyback program. So so the question is asking why the company has stopped the share buyback program and what's going to happen or what needs to happen in order for the company to restart that again.
Yeah, so what stopped the share buyback program is, the stock kind of moved up almost to about 130, right? And so I think there were two reasons for that. One of it was a good reason, which is we were performing, and then it came down again, and then it kind of went up sort of to similar levels in the 125, 126, 127 range. And candidly, I think some of that was fueled by M&A rumor. So with that, it really didn't make sense to continue the stock buyback. But now, the M&A has happened. Hopefully in time that'll lead to a better market environment. And I think the stock where it sits today has, good, intrinsic underpinnings. So I think we look at it very seriously.
Okay. The other one is about the shareholder or investor base of StarHub. So
Yeah.
as we said, right, StarHub is a homegrown Singaporean telecommunication company, right? And
Yeah.
the shareholders are very much shareholder Singapore based as well. So
Yeah.
would that be any plan or to attract non-Singaporean institutional investors, and how the company has been doing that? Okay.
Yeah, so we do have non-Singaporean institutional investors in our base. Do we want more of them? Absolutely, right? Because we want to get more flow in the stock. I think like a lot of companies on the SGX, I think we can do more to improve our liquidity. I think we have a bit of a problem in Singapore as a whole, right? Which MAS and others are trying to address. So we definitely want to bring in more of the long-term, kind of international institutional investors that we add to the roster that we already have. And we'd like to do that in a way which kind of tracks our progress as a company. So yes, you'll continue to see us, be active on that front. But I'd like to do that in a way, as I said, that tracks the progress of the company. Whether it's stabilization in the consumer segment, whether it's growth in the enterprise segment, whether it's M&A, et cetera, et cetera. So I think as we put points on the board and hit milestones, which is a bit murky at this point, right? Because you look at the state of the consumer market, it's just a mess. It's just a mess. But, there's some light at the end of the tunnel with the consolidation that's happened. So I'd like to be able to, we continue to talk. We actually have very active dialogue with international institutional investors. I think there are people that are kind of looking at the company. I think they've always thought it's interesting. They've always thought, there's some events which could kind of change the complexion of the sector. And they've always thought, our angle was quite interesting. Actually, when you look at telcos who have, I think if you look at the percentage of our revenue that comes from enterprise, we're like one of the top 3 in the world. So what I'm saying is, because of those 3 things, I think we've had institutional investors internationally looking at us. But I'd like to, kind of really push to bring them on board in a way that tracks progress and milestones and, kind of trigger events. And I'm not sure, now is the best time to go on and kind of an all-out, campaign to do that. We'll do it incrementally over time.
Okay. And okay, let's take 2 more questions, just given the interest of time. So one question is asking if you can explain in layman terms the modern digital infrastructure platform play, what that did in layman terms, and how that compares to Singtel or NCS. Yeah.
Okay, so let's compare what we have. So let's look at modern digital infrastructure as a pyramid, right? At the bottom of the pyramid, we have what we call. So that infrastructure is all forms of connectivity. So 5G, fiber broadband, and optical networking, and all forms of cloud. So private cloud, and the three variants of US hyperscaler cloud: Amazon, Google, and Microsoft. And we bring all of those things together. So we bring the forms of the connectivity together as ubiquitous connectivity. So as I said, if you're an enterprise customer of ours and maybe at some point a consumer customer, you don't care how you get your connectivity because it's all unified. We unify it for you and we deliver you what you need. You don't care how you get it delivered. Then the layer on top, which is the middle layer, which is kind of what we call the tech and tools layer, are all the things that are quite AI based that you need to run your cloud and get value out of the cloud as well as your connectivity. So it's like a lot of data that allows you to monitor network performance, that allows you to identify anomalies and rectify those anomalies, that allows you to identify anomalies in cyber threats and rectify those cyber threats. So that's the second layer. And then the layer on top is what we call the data-driven use case layer. So that essentially is you can use our data, the data that we have, and you can combine it with your data. So if you're a real estate developer, you have your own users. If you're MRT, you have your own users. So you can bring our data together. And the data obviously sits on our infrastructure and is monitored by the tools in the middle. And then you can create value. You can say, hey, do I sell more product to these combined users using the data that I have, which by the way now has Gen AI on top, so you can kind of ask questions and run that data in a very intuitive way. And you can get more value. It could be a real estate developer looking to sell more stuff to get more value to its tenants. It could be a physical infrastructure provider like SBST or SMRT, working with us so they can get to their users faster in terms of train disruptions, things like that. So those kinds of things. So we bring it all together. How does it differ from NCS? And then they'll cobble together a dashboard and then they'll give it to you. So it's kind of bespoke. It's made for you, which is great.
I see.
What's not so great is it takes a long time to put together because they're just buying it and putting it together. And then you have to go and get the infrastructure. So you have to run and get it from either us or Singtel. And it's going to take a lot of time. And it's, there's lots of margin added along the way. Singtel, I would say, focuses more on the connectivity. But I won't speak about what they can and can't do. It wouldn't be fair. And, then you have to go.
One final question, right? So in terms of M&A, so obviously the company has done something in Malaysia and Philippines as well, just now you mentioned, like any other market or country that you have in mind after these three countries?
Well, Philippines is just a partnership. It's not an M&A.
Yep.
But as far as M&A, frankly, we really want to stay in Southeast Asia.
Yeah.
And kind of the larger markets in Southeast Asia that have good talent and good companies, good customers. Good customers are really important for us, not just because we want to make money, but because, good customers is how you create good use cases. Like when we work in Singapore with JTC or NUS or NTU or Republic Poly or Changi Airport Group and, all the biggest customers in Singapore, we create great use cases working with them. And then we take those use cases and we replicate those use cases with others. So that's kind of how you build value. You can't build value sitting in a room, kind of dreaming up something which you think customers want. And then you say, hey, this is what I have, because it's not potato chips, right?
Sure.
This is like
Sure.
fairly complicated stuff. So building use cases that are well validated by customers. So going into a market that has, great talent and great customers that we can really work closely with, like we do in Singapore.
Got it. Thank you very much. The time is almost up, so I'll just pass it to Maliha. Thank you.
Thank you, Alec. Thank you, Nikhil. I think that was a very fascinating discussion. Unfortunately, we're a bit short on time, and I see we have a few questions left. So for those of you who still have some queries, feel free to post them on the webinar inside, or you can also contact StarHub via the IR button on Smartkarma, and they'll get back to you. So with that, thank you very much, everyone. Would like to wrap up today's webinar. Have a great week ahead.
Thank you.
Thank you. Thank you all. Thanks so much for spending the time with us. We really appreciate
Thank you.
it. Thank you.